Welcome to This Week in Money. I'm Jim Goddard. Today, CIBC Wood Gundy's Ross Clark talks about the charging Canadian dollar and how copper might have hit its peak. Rick Reaugh, president and CEO of Sprott USA Holdings, tells about his efforts to raise funds for hurricane victims that won't be siphoned off by high overhead charities or government interference. He also comments on whether a declining U.S. dollar is good for commodities. Ed Steer, founder of EdSteerGoldandSilver.com, believes the prices of gold and silver would be much higher if they weren't so manipulated. He wonders why the mainstream media won't tell you about that. Plus, we'll have company showcase updates from American Manganese President Larry Reaugh and Jim Pettit, the CEO of Aben Resources. We'll talk to Ross Clark right after this.
Aben Resources Limited is a gold exploration company with significant projects in British Columbia, Saskatchewan, and the Yukon. Trading on the TSX Venture Exchange, symbol ABN, and the pink symbol ABN.V. Surrounded by world-class gold deposits and mines, Aben's 23,000 hectares Forrest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at abenresources.com.
Welcome to This Week in Money, the source for market opinions. Here is Jim Goddard.
My guest is Ross Clark. He's an investment advisor at CIBC Wood Gundy in Vancouver. Welcome back to This Week in Money, Ross.
Always a pleasure, Jim.
The Canadian dollar receiving quite a boost when they decided to suddenly increase interest rates in Canada.
Yeah, it's interesting. A week ago, we mentioned that the Bank of Canada was probably going to do another quarter point, and it would be sooner rather than later. Most of what I had been reading was that we would be expecting it very soon. So it came, as a bit of a surprise to a lot of the street when we got the quarter point this week from the Bank of Canada, and the dollar rallied on it, clearly tacked on a full cent. So you actually now have U.S. interest rates below Canadian rates, everything from the 2-year term up to the 5-year. Getting back to actually what we used to have many years ago when Canadian rates were higher than U.S. rates. So, but a big move in the dollar, 82 and change now, and this puts us into the perspective of what we've been thinking, that after that first decent pullback in the summer, the dollar could make a new higher high by 1.5 to 2 cents. So we're up into that category right now. Interesting, after the rate hike here in Canada, then any of the action in the latter part of the week really related to the action we were seeing in the U.S. dollar, which also now has made new lows against other currencies, in particular the Europeans with the euro. So when we take a look there, I think the Canadian is going to have probably an upside bias as long as the U.S. continues under the type of weakness it has right now. But I think that as far as the momentum is concerned, it would be at a much, much slower pace.
Ross, can you maybe explain why, when they increase interest rates in Canada, it gives the loonie a pop?
Well, there's hot money that is looking to receive best returns possible, and if they can pick up an extra quarter point on very large sums of money, it will move as far as the currency is concerned, and more so, it even moves the areas out on the curve. So if you can invest for a longer period of time, say you can, instead of just picking up a quarter point over 2 or 3 months, if you can be picking up the differential over a 2 or 5 year term, now if you're looking to buy a Canadian bond and you're getting that much more for your Canadian bond over a U.S. bond for a period of 5 years, yeah, you're going to put more money across to that currency as long as you're reasonably comfortable as far as the currency itself is concerned. I mean, if you've got a country where you're concerned about the legitimacy of the government, et cetera, then it's quite different. But when you're dealing with one of the majors, such as Canada, an interest rate differential will pull a lot of money across in the short term. But that's hot money. If the spread starts to narrow, it will disappear as quickly as it came to us.
Copper has been on a huge run. Is that run over?
It's we got it would appear that it's ready for its correction. Bottom line here is that in August it was gaining a lot of good upside momentum as it pushed towards the $3 mark. We had what we considered to be good signs of strength, but the type of thing that you see as you're coming out of a base, and it proves that there is resiliency there. However, when you get as overbought as we became in August, you can typically only rally for another 2 to 3 weeks before you get a correction. And that's exactly what happened at the tail end of the week. Copper had been up around 316, closed off the week at 303, and it had what we call an outside reversal week where it made not only a new high for the move, but it actually was a new high going back for 3 years, and then closed below the previous week. So you can see that it clearly has run out of steam. There was a Canadian miner who actually came out with a secondary issue looking to raise some additional money at the tail end of the week, and the bought deal that was done has yet to be fully placed. So it goes to show that this market is ahead of itself right now. The normal movement in copper is that you would have a seasonal play that would have a high in August through September and a correction out usually into November. And in the bear market years, it becomes a very discerned move to the downside. In the uptrending years such as we have right now, those corrections tend to be fairly quick. They're 2 to 3 weeks. You get rid of the excesses. Where we closed at 303 on copper, I would think something in the 280s is what you might be looking for as a support level. We get into there in the second half of September, maybe into October, take a serious look at stepping into some of those miners again.
Ross, thank you so much for being on This Week in Money.
Always nice to be here, Jim.
My guest has been Ross Clark. He's an investment advisor at CIBC Wood Gundy in Vancouver. Coming up, Rick Ruhle, President and CEO of Sprott USA Holdings.
Always consult your investment professional before making any investment decision.
I'm Larry Reaugh, President and CEO of American Manganese, Inc., listed on the TSX Venture, ticker symbol AMY, AMY, with proprietary patents in the U.S., China, and South Africa. Our focus is on recycling lithium-ion batteries for electric vehicles. China recently legislated the responsibility for recycling onto their electric vehicle manufacturers and importers. For more information, please visit AmericanManganeseInc.com or phone me, Larry Reaugh, at 778-574-4444.
Arctic Star Exploration, operated by a team of proven mine finders, is focused on diamonds in Finland and the Northwest Territories of Canada. A work program is planned for our Finland property that contains diamond-bearing kimberlite. Arctic Star trades on the TSX Venture Exchange, symbol ADD, and the Frankfurt Exchange, symbol 82A1. Please visit our website at arcticstar.ca or call us at 604-689-1799.
This Week in Money is archived online at talkdigitalnetwork.com.
Welcome back to This Week in Money. I'm Jim Goddard. We're speaking with Rick Ruhle, President and CEO of Sprott USA Holdings. He's talking to us from Carlsbad, California. Welcome back to the show, Rick.
Always a pleasure. Thank you for having me.
Sprott's looking for quality organizations to donate money to help the victims of Hurricanes Harvey and Irma. What's your criteria and how is your search going?
The search is going reasonably well. I'll answer the questions in reverse order. We are looking for organizations that are efficient in the first instance. We want to see the vast majority of our money go into relief efforts, not general and administrative expense or fundraising. And we also want organizations that have a libertarian focus. That is, we don't want to give money through governments, which we believe are by and large harmful. We want to give money to private efforts. So we are exploring efforts that we have heard about through Tom Wood's fine libertarian radio show, and also efforts that involve Tom Mackey and Whole Foods, and also the Ron Paul organization.
Do you have a goal for how much money you plan to raise?
We don't, and we aren't really intending to raise money. We're intending to use our own money and our employees' money. If we find the right circumstance, we might consider allowing our clients or people in our orbit to donate money to the same causes that we have done due diligence on, and we might consider a matching grant. But at present, this is just a reflection of the fact that the Sprott organization has enjoyed a lot of support from the Texas community, from clients, and we've also made a lot of money in the last 30 years investing particularly in Houston-based companies in the oil and gas business. Texas has been very good to us, and we would appreciate the opportunity to show our appreciation in a tangible way in this moment of extreme need.
Yes, and we don't know how bad Irma is going to be at the moment that we're talking, but we're being told that it's going to be worse than Hurricane Andrew, which was absolutely devastating to Florida's agricultural industry.
Well, certainly, I just saw the weather map offered up by the reinsurance business for the potential Florida storm, and it's absolutely catastrophic. Potentially catastrophic, too. One at a time. We have to deal with the Houston situation before we move on to South Florida.
Can listeners donate to help out the victims of the hurricanes? And if they can, where should they go?
Well, we don't have that information yet. We are trying to sort through the organizations that are involved down there, probably avoiding the very large organizations that always seem to use disaster as a fundraising technique, trying to find smaller, more efficient organizations, and organizations that share our own core values with regards to no government participation and private solutions to perceived public problems.
Do you see Irma and Harvey affecting financial and commodity markets in a big way?
Not in a large way. I think they will affect American politics in a very large way, and I think that's unfortunate. I think that the political class in Washington will use these two storms as an excuse to avoid debate on what is the appropriate level of government expenditure and therefore the debt ceiling. There was going to be a very contentious political discussion in the United States concerning the federal debt limits, and neither the Republicans nor the Democrats wanted to have that discussion. Although the electorate favors debt limits, the politicians, that is the allocators of capital, don't. And these two storms are an absolute godsend to the political class and the chattering classes to avoid a discussion of what level of theft and extortion is appropriate in the United States, and that's very unfortunate.
They've extended the debt ceiling decision time till mid-December. Are they just putting off the inevitable? And why do they even have a debt ceiling? Because they never seem to look at it.
Well, what you say is absolutely true. It's an exercise in idiocy. Both parties exist to steal, just for different constituencies, and the storms have given them a wonderful chance to duck any responsibility that they might normally have to look after the currency. That's, one of the reasons why Sprott, in its own small way, believes in private solutions to what are perceived to be communal problems. We don't want to abdicate our ability to show compassion to our friends in Houston to such obviously cynical organizations as governments.
The Conference Board of Canada says government policy is the biggest barrier to business investment in our country. Same thing in the States?
Absolutely. There's many problems in the United States. The thing that makes it work is not collective stupidity in the form of government. It's markets. It's the fact that 5 or 6 pimply-faced kids in Palo Alto, California, can commandeer somebody's garage, and out pops Apple, and then a decade later, out pops Google, and then a decade later, out pops Uber. What we need more of in the United States and in Canada as well is individual initiative and freedom. We need less collective extortion.
Right now, there's a big debate in Canada. The federal government is going after small businesses, keeping them from pooling their funds and taxing them at a lower rate. They're going to take that away. And I'm hearing from the business community, they're absolutely livid about it because it will now limit their ability to store up funds to expand their businesses.
Of course. The nature of government is that they want to consolidate all power, including economic power, to themselves. The idea that individuals should have individual decision-making capabilities, which is what wealth really is an anathema to them. I happen to believe that everyone in Canada should pay the same tax rate, which is 0.
Is the declining U.S. dollar good for markets and commodities?
The declining U.S. dollar is probably good for commodities prices in the near term. It has certainly been shown to be good for the gold price over 40 years. The most reliable indicator that I know of the gold price is the pricing divergence between the 10-year U.S. Treasury and the 10-year TIP, which is a sort of a sophisticated way to play a lack of faith in the purchasing power of the U.S. dollar over 10 years. The breakdown in that delta has been very beneficial for gold, and while it's not good for the United States, I think it'll be very good for the gold price.
What do you see ahead for gold and silver?
I'm too old and wise to make a specific prediction, although that's what you'd want me to do. I can tell you this, I certainly sleep better at night owning gold than I do not owning gold. For me, gold has always fulfilled an insurance function in my portfolio. I own it, and lots of it, in the odd hope that it doesn't really go up in price, because as insurance, you need to understand that any circumstance that causes your policy to pay off is always bad. If you think of gold in an insurance sense, think of auto insurance, where you get paid if you get in a wreck, or life insurance, where you get paid if someone dies. Now, gold stocks are a different set of circumstances, and I feel near-term more bullish about the gold stocks than I do about gold, because in addition to the fact that they are a leveraged participant in the gold market, they are also beneficiaries of their own activities. And I'm delighted to say, over the last 3 times, for the first time in a 40-year career, that the gold industry has begun to look more at being efficient. In other words, being good stewards of capital and allocators of capital, rather than merely being leveraged reflections on the gold market. The fact that gold has done well this year and the gold stocks haven't done well this year, I think augurs very well for the gold stocks.
I remember people used to say the break-even point for the gold miners was about $1,100 an ounce. Have they got it down to about $800 now?
I don't believe so. They report a number called all-in sustaining costs, AISC. And that's really accounting fraud, because all-in sustaining costs don't take into account 2 things. They don't take into account the failed efforts of the industry and exploration. That is, they don't take into account the capital inefficiency of the juniors, which waste vast amounts of money. But in terms of the companies that report AISC, they also don't take into account prior year write-downs. So the depletion and the depreciation schedules that they report are really fraudulent because they've written off prior capital expenditures, despite the fact that that money has been sent to money heaven. My suspicion is that if you include prior year write-downs, and if you include the total cost of capital, that the industry's break-even is more like $1,200 to $1,250.
It sounds like the accounting system the movie industry uses.
Well, I'm not familiar enough with motion picture industry accounting to confirm or deny that.
Well, I believe officially Star Wars, the original one, has yet to make a profit.
Well, the gold industry does it the other way around.
Yeah.
They report profits when they don't make them, and I guess the motion picture industry makes profits and doesn't report them.
Is the U.S. military-industrial complex still good for commodity markets?
I don't think it ever was good for commodity markets. I guess you get a temporary economic boost when you break things and blow them up. But what's really good for the commodity markets is global growth. And there's no part of war and no part of defense expenditures that are good for global growth. Peace and private initiative is what makes the 7 billion people on Earth wealthier and more able to afford the lifestyles that are commodity-centric.
Rick, we're hearing the Dow could collapse this fall, and we're hearing it's heading over 40,000 points. What do you think?
Oh, I think neither are right. I think the Dow will continue to do okay in a very low interest rate environment. The Dow is populated by very good companies that have proven themselves to be globally competitive despite a very strong dollar and despite the U.S. government's best efforts to ruin their economic prospects. At the same time, they enjoy an artificially low cost of capital as a consequence of constrained interest rates, and the dividend yields that they pay are attractive relative to savings products that suffer from that same artificially low cost of capital. So the circumstances intact for the S&P 500 to do okay. A rising interest rate environment, that is a U.S. 10-year rate, as an example, that was 150 or 200 basis points higher, would change that in all regards. The cost of capital would go up and the attractiveness of the dividend yields relative to savings products would go down. So I think the levels of equity pricing in the United States have more to do with the continuation or the cessation, of interest rate fraud than they do anything else.
Is the bond market in trouble?
I don't think the bond market is in trouble currently. The bond market is really a reflection of confidence, and confidence is very high. I can tell you that at least the U.S. bond market has been in a bull market since 1982. The yield on the U.S. 10-year Treasury has fallen from, if my memory serves me correctly, 15.6 to 2, which means that the bond price has absolutely soared. Now, after a 37-year bull market where the yield falls from 15.6 to 2, it's pretty obvious to anybody with a sense of arithmetic that that bull market is closer to the end than to the beginning. And certainly a rising interest rate, if it happens, that is, if the Fed either chooses to tighten or if the market reasserts itself and interest rates begin to rise, the impact on the bond market would, of course, especially the long bond market, be absolutely cataclysmic. That's not a forecast, it's just an observation.
We'll have more with Rick Ruhle when This Week in Money returns.
I'm Brian Fowler, president of Blind Creek Resources Limited, listed on the TSX Venture Exchange, ticker symbol BCK. Blind Creek is focused in the Yukon, Northwest Territories, and British Columbia. The company's key property is the Blend Project, one of the largest undeveloped lead-zinc-silver deposits in Western Canada, plus plans to advance the recently acquired, fully permitted historic Engineer Gold Mine in the Atlan District of Northwestern BC. Check us out at blindcreekresources.com.
I'm Bill McWilliam, president of Cascadero Copper, CCD on the TSX Venture Exchange. Cesium is one of the world's rarest metals with a growing industrial demand. Drilling is underway on our Tehran property in Argentina to prove up a cesium resource. Cascadero's patent-pending leach process has the potential to make Cascadero the lowest cost supplier of cesium in the world. Visit our website, cascadero.com, or phone us at 604-924-5504.
This Week in Money is archived online at talkdigitalnetwork.com.
Welcome back to This Week in Money. I'm Jim Goddard. We're speaking with Rick Ruhle, President and CEO of Sprott USA Holdings. Rick, is the U.S. real estate market peaking?
I don't know the answer to that either. I think, again, it's going to be a consequence of the government's ability to continue to manipulate interest rates and inspire confidence. Certainly parts of the United States are still experiencing a shortage of residential real estate. And my suspicion is that habitable real estate in Texas and perhaps next week in Florida will be in extremely short supply. I'm a commercial real estate investor myself of sort of 30 years duration, and I need to say that the sort of 5.5% cap rates offered up by slow-growing commercial real estate rents in cities I'm interested in investing in the United States don't attract my money. What I will tell you is that one branch of real estate investing, which is agricultural real estate or farmland, looks extremely attractive to me. Grain prices have fallen by half. Farm incomes have fallen. High-quality farmland prices, I'm not talking about marginal farmland, but high-quality farmland prices in the upper Midwest with great alluvial soils and good access to water have fallen substantially in the last 5 years and are beginning to represent what is to me compelling value. The idea that I could buy a McDonald's with a 5% cap rate in a declining neighborhood or buy extraordinarily high-quality corn and bean land in Ohio or Illinois at a 7.5% or 8% yield, where I expect the grain price to go up and I don't expect the hamburger price to go up, seems to me like a pretty clear choice.
Will the 28% U.S. tariff on Canadian softwood damage or hinder efforts to rebuild after the hurricanes?
Oh, I think it'll hinder. Free markets always work better than forced markets. The truth is that Trump's bluster about protecting Americans seems to go over very well with the same morons who are going to be diminished by it. Just like anti-American blunderings always seem to work well with the morons in the Canadian political establishment. So, although, of course, you would want a free market in softwood lumber when you were going to have to rebuild vast amounts of housing stocks, the politicians don't particularly care much about what's good for the country. They care a lot about what is good for specific constituencies that benefit them. So although a cessation of the softwood tariff would be wonderful for the country, for that very reason, it's highly unlikely to happen.
Is artificial intelligence the next big tech boom?
I don't know the answer to that. My track record in technology is almost unblemished by success. I think that big data and artificial intelligence is extremely useful for practitioners. I know it's beginning to work wonderful efficiencies for Sprott, and I assume it is for other people. But I would leave that question to people that you could interview who knew more about technology markets than I.
Could artificial intelligence replace politicians?
Oh, your lips to God's ears. I would take an algorithm over Trump or Trudeau anytime. I would take an algorithm as simple as 2 + 2 = 4.
The Canadian government is going to spend $360 million on infrastructure and roads in the Yukon. How will this help out the mining industry?
How will it help out the mining industry? Well, I guess any dollop of corporate welfare, that is, any theft that the industry is allowed to make at the expense of others, reduces the cost of capital to the industry. People are always less critical of theft and extortion by government when they are the beneficiaries of stolen property. And certainly the expenditure of $360 million, either borrowed or stolen from Canadian taxpayers, will benefit the shareholders of Yukon exploration. the industry needs to ask itself how it feels about being the recipient of stolen property, of course.
North Korea's saber rattling, developing more and more powerful atomic weapons. How is this affecting prices for commodities, and why hasn't the price of gold really spiked because of this?
My experience, and I'm not a psychological analyst or anything like that, my experience has been that what really moves gold in the last 40 years has been weakness in the U.S. dollar. And that geopolitical events can have a near-term impact, but they really serve as intellectual justification for things that investors were going to do anyway. My experience has shown me that geopolitical fears have sort of a 5 or 6 day half-life and are much less important than we believe they are with regards to the gold price. So my suspicion is that the geopolitical events in Korea will act as a justification for people doing what they do because they are beginning to diversify out of the U.S. dollar and U.S. Treasury securities.
With geopolitical unrest growing, where are the best places to live?
I think, boy, that's a tough question. I personally like living in Vancouver. The geopolitical event that is your city council is causing me to rethink that. So I think I'll duck that question. I don't know.
Well, if you like to ride a bike, it's probably a good place to live.
If you are a foreigner, of course, and you live there less than 6 months a year, the city council has decided to help themselves to another piece of your fortune, despite the fact that you're already a high-margin customer, given that you pay the same property tax as everybody else, with much less demand on services. The geopolitics that's always most interesting to me is the most immediate threat. And my belief is that the political constituency that threatens you most is the one where the politicians are the closest to you.
What sectors are you looking at buying in the future?
The sectors that we're in, the resource-based businesses, look very, very attractive to me. We've been in a 5-year bear market, which is a different way of saying we've been in a 5-year sale. And we've been in one with really spectacular dimensions. The TSX.V is off by 88% in nominal terms, or was off by 88% in nominal terms, 90% in real terms. Think if one of your more savvy shoppers as a listener was walking through Pacific Center, and he, or more likely she, saw a sale on a store that said all items 90% off. That would be extraordinarily attractive because it involved physical merchandise. For some reason, people don't like sales when it involves financial merchandise, but the values are just as compelling. In industrial materials, we see a broad range of materials that are being sold worldwide for less than the cost of production. Only a couple outcomes can happen. Either the material becomes unavailable to society, which in the case of things like copper, nickel, and potash can't happen, or the price rises. But despite the fact that the prices have to go up, the fact that they haven't gone up for 5 years discourages investments. This is a wonderful set of circumstances. Similarly, gold has lost the war against the U.S. dollar for 5 or 6 consecutive years. And the U.S. bond market has trounced gold over 38 years. And I believe both of those circumstances are beginning to reverse. So I'm attracted to the gold market, but I'm more attracted to the gold stocks because although gold has done well, the gold stocks have lagged other stocks and also lagged gold. I feel very good about the circumstance that we're in. Now, many of your listeners have a time frame that's limited to between now and the next long weekend. And that circumstance won't have a happy ending for them. My own experience has been that resource investing involves 2 or 3 or 4 year cycles. And investing in individual companies involves investing in companies where they are answering some critical unanswered question about their business. And my experience is that profiting from that usually takes 18 months to 2 years. So when I say that I feel very, very good about natural resource-based investing, That has to do with a 4 to 5 year time frame in my point of view. I might not make any money in 12 months, but my suspicion is in 36 to 60 months I'm going to make an extraordinary amount of money.
Are Canadian mining juniors the place to be going forward?
If you ask the question as broadly as that, Canadian mining juniors, the answer is no. The junior mining sector on a global basis consists of 20% of companies which have very bright futures and 80% of companies that are valueless. The industry as a whole is an extremely efficient destroyer of capital. What makes investing in the sector work is the realization that probably only 5% of the companies in the sector add legitimacy and occasionally luster to the overall sector. Concentrating on securities analysis, that is, the highest quality people with the highest quality projects, yields consistent returns. Buying the sector itself is a recipe for poverty.
Do you use charting for buy signals on junior mining stocks?
I believe in charting as a timing mechanism. I am currently, or I should rephrase that, I am not an accomplished practitioner. So I rely on technical analysis done by other people in the Sprout organization to help me with my own timing. It is not as important to me as fundamental analysis, so I use it as a timing tool rather than an investment tool.
Who is the average junior mining investor?
I think that by now the average junior mining investor is a broad enough community that he or she begins to defy description. Certainly the traditional junior mining investor has been somebody in the early part of the baby boom generation or the earlier generation that experienced the incredible bull market in the 1970s. That person is traditionally better educated and wealthier than the average citizen and is socially libertarian and politically either libertarian or conservative. But the truth is that the bull market that we enjoyed at the beginning of the last decade broadened the constituency considerably, so that the new generation of gold bug or resource investor, unlike the earlier generation, is approximately 35 to 40% female, is again better educated than the average population, and certainly has a higher income and net worth. But the truth is that the tent is becoming broader and is beginning to defy description easily.
Have you been following Bitcoin, and what are your thoughts on cryptocurrencies?
We have been following Bitcoin with some interest. Sprott has joint ventured an investment with the TradeWinds people, the people that were made famous by the book Flash Crash. And we have invested a substantial sum of money in developing distributed ledger technology around gold, the idea being to launch a gold token which is backed by and redeemable for physical gold, which would be stored at the Royal Canadian Mint. So we've come to learn more than we formerly had known about the blockchain and distributed ledger. With regards to Bitcoin, I made a small speculation last year in Bitcoin. I'm delighted to say a successful speculation, but the truth is I've sold out. I'm familiar with Bitcoin's chart. I've seen it 200 times in my career, and my experience on an interim basis is that the backside of a J-curve chart is just as steep as the front side, but much less fun. The fact is, if the Bitcoin price fell by 50%, or 60%, or 70%, it wouldn't change the reality of the utility of blockchain technology to consumers around the world, and wouldn't derail the argument for Bitcoin or other cryptocurrencies. It's important to note that there will be enormous scams in the cryptocurrency business. You can launch an algorithm, reserve a bunch of new coins for yourself, and promote a small float of coins to other people. A technique, a manipulative technique well known to people who study Vancouver natural resource stocks, and there will be enormous scams and enormous amounts of money lost. And the consequence of that is that occasionally the whole concept of the distributed ledger and blockchain and cryptocurrency will be called to account. But the truth is that the volatility that we're going to see in the prices of all of the currencies, including Bitcoin, is ultimately a good thing. And cryptocurrencies, make no mistake, are very, very good for society as a whole. You and I are consumers. We're users of currencies. I suspect right now that you use Canadian dollars, you use U.S. dollars, and you use gold. The consumer of any currency is benefited by a competition between currencies to generate utility for the user. So the fact that there's going to be 100 new cryptocurrencies to compete with all of the fiat fraud on the market and also with precious metals can only be good for the users as a whole.
China has banned the creation of new cryptocurrencies. Bitcoin's allowed there for now. Does that make it very vulnerable to government whims?
I don't think so. I think with any degree of sophistication that users in China can ignore the government ban. It's important to note that part of the success of cryptocurrencies, in particular Bitcoin, has been the individual citizen's wish to ignore restrictions on the transfer of wealth by governments. In other words, the Chinese ban on cryptocurrency has to do with its efficiency in allowing ordinary Chinese people to ignore the government's wishes as to what they do with their private wealth. I think that the decision by the Chinese government to impose an interim ban on cryptocurrencies speaks volumes about the benefits of cryptocurrencies to individual citizenry.
Why do you think China is restricting currency exports from the country and the ability of people there to invest in foreign lands and companies?
I think it's difficult for the Chinese to have a fixed exchange rate and open capital markets and run a large deficit. The ability to restrict the citizens' export of capital has a lot to do with the government's wish to avoid people to exercise their free will against the depredations of government on private wealth.
What percentage of people do you think actually think for themselves?
Sadly, I think the answer to that number is not very many. People, in my experience, and again, I'm not a psychologist, people would prefer to feel as opposed to think. It's easier. People are more interested in narratives that involve biography, people, than they are about ideas and issues. And I think that's very unfortunate. I'm not saying I'm immune to those human temptations. But the truth is I've become fairly cynical about most people's ability to judge what is actually in their own interest, and to act and think independently of their government and independently of the sort of comfortable ethos provided by the cabal of babble and the mainstream media.
How is the 2018 Sprott Symposium in Vancouver shaping up?
Now we're coming to good questions. We were delighted by the 2017 symposium. We are at present going through the attendee evaluation forms and the exhibitor evaluation forms. And I'm delighted to say that they're overwhelmingly positive. We have 6 or 7 new ideas to improve the conference next year that came from attendees this year. One interesting fact I've learned in 40 years of financial services is if you ask rich, smart people how to serve them better, they are usually more than willing to supply you with ideas. This year has been no exception. So although the 2017 conference was easily the best conference that we've put on, the 2018 conference will be a substantial improvement over it because the attendees care enough about the conference to contribute the intellectual capital necessary for its improvement.
Rick, how can people find out more about Sprott?
We would encourage investors around the globe to go to two different websites, www.sprott.com, and if they're natural resource investors, probably go to www.sprottglobal.com. The reason I mentioned the Sprott Global website is there's probably 200 hours of instructional material on that website. How-to material, including a 50-hour course I did with the Colorado School of Mines. And this is absolutely free, a wonderful, wonderful price. You can also, while you are there, subscribe to our blog, Sprott's Thoughts, which I guarantee you will get your money's worth. There's an absolute money-back guarantee because it's absolutely free.
Rick, thank you so much for speaking with This Week in Money.
Always a pleasure. Thank you for the opportunity to share and vent.
My guest has been Rick Reaugh, President and CEO of Sprott USA Holdings. He was speaking to us from Carlsbad, California. Coming up, Ed Steer, next on This Week in Money.
Glance Technologies owns and operates Glance Pay, a disruptive mobile payment technology now live in 16 cities in Canada and about to launch in the U.S. With revenues up 664% in the last quarter, Glance Technologies has the potential to be a worldwide leader in an industry projected to grow to $1.3 trillion in 3 years. Glance Technologies stock symbols are GLNFF in the U.S. and GET in Canada. Find out more at glancepay.com.
Lotus Ventures Inc. is a BC-based medical marijuana company poised to launch into the rapidly evolving cannabis sector. Lotus is in the final review stage of the Health Canada approvals to become a licensed producer, having arranged facility financing of up to $12 million, plus building permits for its prototype indoor production facility. Shares trade under the symbol J on the Canadian Securities Exchange. Visit our website at lotusventures.ca.
I'm Douglas Mason, President and CEO of Rainy Mountain Royalty Corp., RMO on the TSX Venture Exchange. Rainy Mountain's Brunswick property is located in the Rideout Shear Zone in Ontario. With grab samples running as high as 32 grams per ton gold, a drill program will commence this spring to test the numerous targets located by recent groundwork. For more information, visit our website, rmroyalty.com.
This Week in Money is archived online at talkdigitalnetwork.com.
My guest is Ed Steer. He's the founder of EdSteerGoldandSilver.com and a director of GATA, the Gold Antitrust Action Committee. He's speaking to us from Edmonton. Welcome back to This Week in Money, Ed.
Well, thanks for having me on again.
Ed, the Canadian dollar has just been charging higher. Could we see par or better against the U.S. buck?
Well, I suppose anything's possible. One of the main reasons, of course, this year that the dollar has been increasing in quote-unquote value versus the U.S. counterpart is the fact that the Bank of Canada just raised interest rates for the second time this year, and of course that certainly caught the markets by surprise because they weren't expecting it. But I'm sure the governor of the Central Bank of Canada is taking one look at the housing bubble in Canada, especially in Toronto, Vancouver, Montreal, and the larger major areas, and saying, got to put a pin in this thing somehow. So I think that was their baby step toward it. And whether or not we get to par or not, it remains open for debate, but I know the Canadian government and the manufacturing industry in this country certainly would be in favor of it because our weak currency vis-a-vis the U.S. dollar is one of the reasons why they're doing so well with their exports today, and anything that infringes on that would not be well received. So could we get back to par, I suppose, but it wouldn't be a very popular move.
Doesn't a higher Canadian dollar make gasoline cheaper for us to buy because we pay for it in U.S. dollars?
Oh, there's no question about it. There's, a higher Canadian dollar is a double-edged sword. For the average consumer, you take a look at whatever you buy from the U.S. I exchanged some U.S. dollars for Canadian, and I got to, I think it was 6 months ago, I was getting like $1.35 for every U.S. dollar. Now today, I think I got $1.18. So,
Certainly no question about it. If you're buying something that's imported, regardless of whether it be in U.S. dollars or not, you're paying less for it. So it's certainly wonderful for the consumer, but as I just said in answer to the previous question, the manufacturing industry that relies on exports would be less than enthused with it.
How could a rising Canadian dollar and rising interest rates affect the personal and mortgage debt bubbles in Canada?
Well, the amount of debt that Canadians are holding is, from what I've heard, equal to or even excess of what Americans are holding and the Australians are holding. The average Canadian consumer is leveraged to the hilt, and of course a rising interest rate certainly won't help anything that's debt related, whether it be mortgages or personal loans or lines of credit or whatever it is. So it's not good for that at all. In the short term, it doesn't bother them, but going out month, 2 months, 3 months, 4 months, every dollar the bank makes is a dollar that isn't going into the consumer's pocket. So it just puts the indebted consumer, who's very leveraged, even up further against the wall.
Following an era of cheap money, are constricting credit and rising interest rates likely to turn an overly indebted and oblivious populace into debt slaves?
Yeah, I kind of got ahead of myself on that question. Yeah, well, there's no question. Like I said, a large portion of the population has a huge debt load already, and they're already debt slaves. I mean, I don't owe anybody any money at all, and I'll pay 42 cents on the dollar of every dollar that I make this year to the Canadian government. So, regardless whether you're in debt or out of debt, you're still a debt slave to the government. But those who have a debt burden of any kind are certainly debt slaves to more than people who aren't.
Is the Canadian dollar rising because the Canadian economy is doing well, or is it because of a weak U.S. dollar?
Well, it's partly because the Canadian economy is doing better, but mainly because the Bank of Canada, like I said, just raised the interest rates. If you take a look at the U.S. dollar, I'm just going to do an aside here. If you go back and look at the dollar chart, the U.S. dollar index chart, it started to go down on January the 1st, has been in an order to decline up to and including this date. And U.S. dollar index is at 1,100 basis points from January 1st to today. So the Canadian dollar is rising vis-a-vis the U.S. dollar, but it is also falling vis-a-vis other currencies as well, because we're pretty much tied to whatever is going on in the U.S. So to say the Canadian dollar is rising due to a weak U.S. dollar policy, that's part of it, but it's not all of it.
Are gold and silver, along with the U.S. dollar, manipulated?
As Chris Powell said back in 2008, Chris is the Secretary-Treasurer for GATA. He says there are no markets anymore, only interventions. And that was back in 2008, right in the middle of the financial crisis that was going on at the time. Here we are, 9-10 years later, and nothing has changed. Gold, silver, interest rates, the currencies, the bond market, the stock markets, there's nothing out there that escapes the purview of the Federal Reserve, the Treasury Department, or the Bank for International Settlements, or the Exchange Stabilization Fund. There are no markets at all out there. What you're seeing is a total financial and monetary hallucination.
If the U.S. dollar suddenly drops in value, could gold and silver go parabolic?
Well, they go parabolic any time as long as the large eight traders, the bullion banks, J.P. Morgan, Chase, Scotiabank, HSBC, USA, Citigroup, if they stopped going short against all the people who are going long in the COMEX futures markets and all commodities, especially silver and gold, then we'd see gold and silver prices that are astronomically higher than what they are now. So, the U.S. dollar, like I said, is down 1,100 basis points, and gold's up $120 an ounce. Gold should be up $1,200 an ounce or more from that. We should be screaming new highs above $1,900, well into $2,000, $3,000 an ounce right now. So, are the precious metals manipulated? They have been manipulated, and they're still being manipulated to this day.
Is the gold-silver ratio a good indicator of trends in gold and silver?
Well, it just shows you how manipulated silver really is. When you look at silver versus gold, it comes out of the ground at 11 ounces to 1 or 9 ounces to 1. So for every 9 ounces of silver, it's mined, there's 1 ounce of gold mined. So what's the silver-gold ratio right now? 73 to 1. So 9 to 73 means that silver, just on the basis of the way it comes out of the ground, should be priced 8 times higher than it is now. And since it isn't, that just means that the gold-silver ratio is an indication of how much the silver price is being rigged versus the gold price.
Do gold and silver stocks versus gold and silver bullion provide any market indicators?
Well, before the markets really became rigged, there certainly was no question. There was always the comment that the stocks led the bullion price itself, because the insiders would know when they pile into gold stocks. But with the markets being as rigged as they are now, I wouldn't bet any money on that ratio, or on that fact. I would just say that right now the markets are very confused, and even though gold and silver have risen, a decent amount this year net, the gold stocks and especially the silver equities have not even come close to keeping up with the changes in price. So everybody's being super cautious right now. So the gold silver ratio isn't a good ratio to use, and neither is the fact that the stock should be indicating what the metals are doing.
Is a bullish commitment of traders necessary for a bull run in gold and silver?
Absolutely not. Like I said before, and as silver analyst Ted Butler has said for the last 30 years, all that J.P. Morgan, Scotiabank, and HSBC USA and the other bullion banks have to do is just back away from the COMEX futures market and stop going short against everybody who wants to go long, because these banks, the 8 big traders who are short more than 50% of the gold and silver in the COMEX futures market, if they stop going short against everybody who is going long, well, I guarantee you that we'd see an astronomically large 4-digit gold price and an extremely large 3-digit silver price before the close of trading tomorrow. Only they are keeping the cork in the price bottle in the precious metals, and so the commitment of traders is a nice way of keeping score of how the market's being rigged. But do we need a bullish commitment of traders report for a bull run? Absolutely not.
Ed, do you follow seasonalities for gold, silver, and the U.S. dollar?
Well, I follow the seasonalities in so much as the fact that everybody says that one exists, and of course, if you look at the long-term chart over the last 20 years, everybody's seen it. It's posted on the internet in various and sundry forms several times a year, and there's certainly some truth to it. However, it's impossible to tell whether that would be the real-life situation if gold and silver are allowed to trade freely. Like I said before, these markets are so managed that whether or not that chart is close to the truth is hard to say.
Is copper rising because of the U.S. dollar is declining?
Well, that's a very interesting question. The commodities go up in price because the managed money traders, which have become such a huge factor in the commodities market now, the managed money traders are in there buying up long positions hand over fist, and all the other traders are going short against them. So it's a combination of supply and demand, if you can actually believe that, because there's so few commodities allowed to follow supply and demand factors. Copper may be one of them to a certain extent. May have something to do with the U.S. dollar, but it's mainly because of the trading activities of the managed money traders on one side and the commercial traders on the other who are going short against them. It's the same battle. It's the same manipulation going on in copper that goes on in gold, silver, platinum, and palladium.
Would the ultimate swamp draining be the ending of the U.S. Fed?
Well, Mr. Trump came in and said he was going to drain that swamp, but of course the deep state put an end to that, and he's basically been neutered as president. If the ultimate swamp draining did occur, there's no question that the Fed would be one of the casualties. We all prayed for that day, of course, but it's never going to happen, or at least if it is going to happen, it's certainly not going to happen under this administration now.
What's the latest with the Gold Antitrust Action Committee?
Yeah, well, Bill and Chris and I both, or all three of us, we still speak at, various conferences. I know Bill and Chris are going to be at the New Orleans Gold Conference soon. I think it's in October or early November. And Chris speaks in Hong Kong and Singapore and other places. He's been to Europe and Britain, and I speak more locally here in Vancouver at the gold shows there in twice a year. So we're getting the message out. GATA's been around now since 1999, which is almost a generation. And pretty anybody and their dog that follows the investment market in gold and silver, including the mining companies, are all aware of the fact that J.P. Morgan and the other bullion banks are rigging the prices of precious metals. It's an open secret now. You're seeing more and more of it in the press all the time. I noticed over at Sharps Pixley yesterday, even the venerable Ross Norman had to come out and say in not so many words that, hey, it's the boys in the COMEX that are rigging the price and that the prices will be so much higher. So the word is getting out, but the mainstream press certainly won't touch this story with the proverbial 10-foot cattle prod. And of course, as you know, the incestuous relationship that exists between the press, Wall Street, the banking system, and government. They're all out there to protect their own interests. And so they're all covering each other's backs. And if you haven't seen the movie The Big Short, I urge you to do so. And if you have seen it, I urge you to see it again, because what's going on there in subprime back in 2007 through 2009 is precisely what's going on with precious metals prices, and that's been going on for a couple of generations now.
Ed, can you tell us a bit about edsteergoldandsilver.com and how people can find out more about it?
Okay, thanks for that. Okay, I was hired by KC Research to write their daily gold commentary 10 years ago now. And I wrote their daily gold commentary for 8 years, and it became their most successful and highly rated publication almost right away, and stayed there for the whole time I was there. And then 2 years ago, when they sold to Stansbury, I went on my own. And I have a daily subscription service 5 days a week, edsteersgoldandsilver.com. And the fee is $100 US for about 200 plus commentaries a year. So if people are interested, they can just Google my name, Ed Steer, S-T-E-E-R, and that website will come up, and they can click on the sample column, and they see what they get for their money, and they can decide for themselves if they wish to join or not.
Ed, thanks a lot for being on This Week in Money.
Entirely my pleasure. Thanks for having me on once again.
My guest has been Ed Steer, founder of edsteergoldandsilver.com. He's a director of GATA, the Gold Antitrust Action Committee. He was speaking to us from Edmonton, Alberta. And that wraps up our show for this week. We'd like to thank our guests, Ross Clark, Rick Ruhle, and Ed Steer. And thank you for listening. Also, at the end of the show, we'll have a company showcase update with American Manganese CEO and President Larry Reaugh, and another one from Aben Resources CEO Jim Pettit. If you have any questions for the show, you can email us at info@howstreet.com. I'm Jim Goddard. We'll be back next week with more This Week in Money.
Comments made on This Week in Money are an expression of opinion only and should not be construed in any manner whatsoever as recommendations to buy or sell any financial instrument at any time. Archived online at talkdigitalnetwork.com. This Week in Money is a production of How Street Media Incorporated. Executive producer is Tom Allen. Welcome to Company Showcase, an advertising feature on HowStreet.com.
I'm your host, Jim Goddard. We're speaking with Larry Reaugh, CEO and President of American Manganese. Welcome back to the show, Larry.
Well, I'm glad to be here, Jim, and if I forget, you have a great weekend.
You too as well. Larry, what's your take on the current markets and the influence of world conflict?
Well, gold is now beginning to act like it used to a couple of decades ago, in which any kind of a hostilities arise or potential wars or those sorts of influences on the price of gold used to send it up. And we're seeing that happen again because it's a safe haven and it's a good barometer of what's happening in the world, and it's also considered money. So, you know, it's gold is performing well. It's got, you know, there's still a foot on its neck, but because I think it should be a lot higher, but it's at least it's making the indications of coming back to a old gold market and not a financially rigged market. And the other thing is that we've had really good increases in the price of base metals, barring today, which we've had some pretty significant corrections across the board. And that, again, is starting to look like more of a supply and demand situation. I mean, the stockpiles in copper have dropped down to about a little over 200,000 tons. And that would tells me that, yes, copper should keep going north of $3. But again, it'll be influenced by the financials. But I guess the thing is that what we look at when we run one of these companies is we have to be in touch with the overall market. And certainly when you look at the other critical metals out there, cobalt is on a tear. I mean, it's at $61,000 a ton now. And, of course, we expect that we will be a significant producer of cobalt from our recycling program. And lithium has been moving up, although lithium's a small part in the batteries and certainly does very little to influence the profitability of a battery. The other cathode materials like nickel and cobalt, and to a lesser degree manganese and aluminum, they paint a pretty good picture for that market. So it's a market that has a great degree of uncertainty in it, and I imagine a lot of people are saying, well, how does this affect the overall stock market? Well, as you see, the Dow's been going up and down, up and down, up and down, and the Toronto Stock Exchange has been following that. And so it's uncertainty, certainly for the financials in the current market. But I see that AMY should be able to benefit from that.
Well, how do all these changes in the market affect your company?
Well, it has to be all positive. First off, if there is some kind of a conflict that breaks out, like with North Korea, you're going to be looking at these critical metals that are used in some of your ballistic defense high-tech weapons, and so where's that going to come from? And even the low-tech side, where are you going to get the manganese for the steel? Well, fortunately, we have solved the problem that the U.S. had for decades, and that was where would they get domestic manganese, and how could they turn around and make that into a profitable situation? And AMY sits on a technology that can do that, and it has worked on for about 80 years. And but with Cometco, we broke we went through a new cutting-edge technology for the recovery of manganese metals and dioxides at a very low cost. As a matter of fact, our costs are very competitive with China. So manganese, AMY is not just a recycling company that is going to bring a lot of rare metals back into focus and probably help alleviate the situation where there's a big demand for cobalt, but it's also a critical metal company that is definitely going to be needed even in the making of steel. You can't make steel without manganese, and if there was some kind of a world conflict or war, you need that manganese for all your tanks and airplanes and everything else for the steel component. So, you go back in history, in World War I, the United States got its manganese out of Germany. And in World War II, they got their manganese out of Russia. So those are the sorts of situations you don't want to find yourself in. One of our advisors, Dan McGroarty, who was addressed the Senate here recently on the critical metal and the fact that there were 28 metals that were totally dependent on imports, mostly from China, and there are 51 metals, and mostly from China, 28, over half of them. You got to say there's got to be a niche here that AMY could fill. So I see AMY benefiting from two different sources now, and that one, of course, is the recycling, which looks like it could be a very profitable enterprise, and the manganese at Artillery Peak. With our process, we could supply the metal or the dioxides for the battery industry. So I think it's an excellent opportunity for AMY to become much more prominent out there, and certainly should be considered by the Department of Energy or the Department of Defense in the U.S. And I keep talking about the U.S. They're the major consumer of all products, and in the U.S., so they're not totally dependent on outside sources. And So, this is a critical time for AMY. I think it's as people begin to recognize that we've got a few bases covered, that that the time will come for our shareholders to benefit.
And Larry, for new listeners, can you tell us about American Manganese, what you do, and what kind of process you have?
American Manganese is a critical metal company that is out of British Columbia, with our major holding in manganese in the U.S. We have intellectual properties, one that's patent pending, and that's for the recycling of lithium-ion batteries, and we've had 100% success in that so far. And the other is for, as I mentioned earlier, the production of manganese metal or dioxide from very low-grade deposits, and I'm talking 2 or 3% deposits. We're located, our website is AmericanManganeseInc.com, and we can be reached at 778-574-4444. And you can actually contact me at my email address is lreaugh@AMYMN.com, and that's spelled LREAUGH @AMYMN.com.
Larry, what platforms are you traded on and under what symbols?
We're traded on the Toronto Stock Exchange Venture Exchange under the symbol AMY. We are traded in the U.S. under the symbol AMYZF, and we are traded in Frankfurt under the symbol 2M.
Larry, thanks a lot for the update.
Well, thank you.
We've been speaking with Larry Reaugh, President and CEO of American Manganese. I'm Jim Goddard. We were speaking on September 8th.
Comments made on Company Showcase are an expression of opinion only and should not be construed in any manner whatsoever as recommendations to buy or sell any financial instrument at any time. Archived online at HowStreet.com. Company Showcase is a production of How Street Media Incorporated. Welcome to Company Showcase, an advertising feature on HowStreet.com.
I'm your host, Jim Goddard. We're speaking with Jim Pettit. He's the CEO of Aben Resources. Welcome back to the show, Jim.
Thank you very much.
You just put out a news release. Can you tell us what's in it?
Well, we put out a news release yesterday, basically discussing some of the aspects of the visual content of the core. We don't have any assays back. We basically announced that we had extended the drill program. We're getting close to the end, and it might even be over now. I'm not sure. I haven't heard anything. But it's the visual content that's got the market kind of moving. GT Gold put out a news release last week. It was more of the same spectacular results that they came out with a while back. And it's pushed them up to about 160, 170 million market cap from the days of when they were 30, not too long ago. And they were talking extensively about the visuals it's helping them guide the drill program. And they've got a lot of chalcopyrite and oxides and the relationship between it all, and the relationship between the gold content with the copper content in a simplistic explanation. So if you have elevated calco, it's easy for a geologist to sort of guesstimate what the content would be in terms of copper. And in this environment that they're in, and very similar to what we're looking at, you also have a relationship with gold. So if you have elevated calco, you'll have elevated gold values. And they can confirm that when they get their assays back, and you can look at the mineralization off the assay sheets, and you can see a relationship and correlation between mineralization for copper and mineralization for gold. And by simply following that visual reference, they can stay within the zone and continue their success. And when I saw that explanation, and I was up there not too long ago looking at our core, and it looked remarkably similar, and so we figured figured we better put something out along those lines because the phone calls coming in. What does your core look like? You know, it's got a lot of attention. So we did. We put out something similar to that, basically stating that yes, you have elevated copper in the core, be it chalcopyrite. We're hoping that we will have the elevated gold, and you know, that remains to be seen when we get our assays back, and we're hoping they start coming in within the next week, maybe 2. But that's basically the gist of why we put that out. There was so many calls coming in, wanting to know, can you relate to what they said? Yeah, we can.
Where is this drilling taking place?
We're this is in the Golden Triangle, northwestern portion of British Columbia. It's the beneficiary, this region is a beneficiary of a tremendous upgrade in infrastructure over the last several years. And there's even power plants on the Iskut River now, run-of-river plants that are powering the whole northwest quadrant of BC. Paved highway going right up beside the whole area, and a beautiful road that goes in off the highway, built by AltaGas when they were building the facilities. So, and they've left their camp there, so we can utilize their camp, and it's more like a great big hotel.
Jim, the federal government's announced a $250 million program to build a better highway system into the Yukon to help out the mining industry. Will that help you as well?
Well, as a matter of fact, I'm glad you mentioned that. It's more like $350 million is what they're committing to the Nahanni Range road on the very eastern side of the Yukon, and then the Yukon Range that would take it up to Western Copper and Gold, that area. It opens it all up. And it's going to increase the accessibility dramatically, which will bring down costs for exploration and mining. Our Justin property, which is one of the 3 properties we have in Aben Resources, is located in the Nahanni Valley. And to access it, we use the Nahanni Range Road, which follows the Nahanni River. And you've always got bridge issues, et cetera, et cetera. Initially, that road was used for hauling from Cantung to get it down to Watson, I guess, and then over or over the Campbell Highway heading west. It's going to be a tremendous gift. And then eventually I assume they'll follow that with power, and the power, you know, eventually one day could be hooked up, extending up from BC with the new power line and everything they built, basically all the way up to Dease Lake.
Can you give us some background on Aben Resources? What do you do? Where are you based?
Well, Aben is, primarily a gold exploration company. We've got 3 very good projects, all drill ready. It's a question of the time of year that we want to get into them. So right now our flagship is really the Forrest Kerr project in the Golden Triangle in British Columbia, because that area has so many players in it. It's an area play. There's an awful lot of work going on up there. And it's, you know, that project, we had a massive database. We put 3 properties together, and then we basically took the data and put it together on a regional format where we had basically about 100 holes and 20,000 soil and rock samples, and we just put it together and created a regional compilation study. And it's given us quite a series of targets, and we prioritized them. So this is our first year. We've started with 2 of the primary targets that were keyed in on high-grade gold historic numbers. We've gone in to confirm them and try to find the extension, see if they extend, actually, because they haven't been worked for many, many, many years. And since then, there's a lot of new technology and infrastructure to work with now. The other property is Justin. It's up in the Yukon. It's right at the end of the boom up there in the Yukon. We made a greenfield discovery. It's sort of a intrusive. It is an intrusive related gold system that we've discovered, and has the potential for large low grade and also very high grade hydrothermal events. It's tied on to Golden Predator, and we can see that they're going after the high grade hydrothermal events. Could all be related to the same intrusive. And then the third property is in Saskatchewan, just south of the old Claude Resources mine, which Silver Standard has now bought and paid $338 million for it. So we're just south of there. And Silver Standard's basically taken all the ground between us and the old mine, and they're using that for exploration this year. There's a fire issue right now, so they're not working. But they're committed to spend, I think it's about $7 million on exploration, and as well as now operating the mine site. We have a target area there that's very interesting. It's got a permit. We can drill it this winter after the Forrest Kerr Golden Triangle area settles down due to winter conditions. It's actually better to be in there, northern Saskatchewan, in the winter. It's just south of the Athabasca Basin.
Jim, what platforms is Aben traded on?
We are traded on the TSX Venture Exchange under the symbol ABN. We're U.S. OTC Pink Sheets, ABN.V, and Frankfurt E2L2. And
how can people contact you?
They can contact me at through the website www.abenresources.com or info@abenresources.com, or call me direct 604-687-3376.
Jim, thanks for the update.
Anytime, thanks.
We've been speaking with Jim Pettit, CEO of Aben Resources, on September 6th. I'm Jim Goddard.
Comments made on Company Showcase are an expression of opinion only and should not be construed in any manner whatsoever as recommendations to buy or sell any financial instrument at any time. Archived online at HowStreet.com. Company Showcase is a production of How Street Media Incorporated.